Hello and welcome to our presentation on investing in stock markets. This presentation will teach you the basics for a highly profitable investment outcome. We start with basic understanding of what you should expect out of investments in stocks. While you invest your hard-earned money, your objectives would ideally be to A. Maximize profits. Earn more than the prevailing rates of inflation. B. Safeguard capital by reducing risks of capital erosion, reduction in profits or refraining from dead investments. C. Avail tax advantages, if possible. D. Ensure quick liquidity or easy leverage for meeting any adversities. Investments in equity and equity-related products offers great potential for higher returns but also poses market risks. Can you manage your investments in stock markets yourselves? Given the unpredictable nature of stock markets, investing in equities requires solid experience, in-depth knowledge of various business and economic factors, time devotion for analysis, constant monitoring as markets are dynamic. What do you need to mitigate risks to a large extent? As investor you need to, at the least, ensure following to preserve your wealth. Invest only in companies with continuous growth in profits and sales, say over a period of last 3 years. Balance out between high, mid and small cap companies with smaller exposures to small and mid cap stocks. Fix a tab on investing in any single entity, industry and business house to ensure that you on an overall perspective do not suffer because of bad performance of a particular sector or corporate. Time the purchase and maintaining restraint and caution while buying stocks at or nearing their peaks. What suits you? Mutual fund? PMS account? Direct investments? Mutual fund is best for you if you are a small investor and your total investment corpus is less than 25 Indian rupees lakhs. There are many mutual funds catering specifically to various asset classes or industries. There are some balanced schemes which invest both in equity or debt. You should check the performance of the fund manager and the mutual fund company before deciding on your investments. PMS is best for you if your investments are beyond 25 Indian rupees lakhs. PMS provides customized management of your funds and gives you the advantage to invest in sync with what suits your expectations. As your investments are sizable, it is vital for you to allow professionals to take informed calls for you rather than you yourself taking decisions. Your systematic risks in PMS account is to a large extent reduced because of careful selection of stocks, better timings, balanced investing approach and so forth. Direct investments can suit if you are a small but experienced investor and aiming at very long-term investments. For direct approach it is important that you have knowledge and wherewithal to identify dark horses. Let us briefly draw out your advantages if you opt for a PMS account. You as a PMS investor would benefit in following manner. Scientific investment decisions would curb wrongful investing and consequential capital erosions. Expertise of fund managers would enable investments in high-growth potential entities. Transparency and stringent SEBI regulations would ensure safety and accountability, and would act as a safety net. Timely reviews and periodic updates would keep you under full knowledge on performance of your investments. Customized plan drawn for you will be based on your risk profile. MFSL offers customized offerings for its client. We begin with understanding your existing demographic profile, investment patterns, nature of business and so forth. And based on your assessment, we will recommend advice on following aspects. Size of your portfolio account. Plus, Planned additional add-on investments quarter on quarter. Type of portfolio account you should open. PMS is broadly offered as discretionary and non-discretionary. In discretionary module, the investment decisions are solely taken by portfolio manager, while in non-discretionary module, the recommendations are made by portfolio manager but the final decision rests with the clientele. Where to allocate your investments? Debt and money market, equity and equity-related or others. Various risk parameters which needs to be addressed are industry risks, performance risks, management risks, leverage risks, valuation risks. MFSL follows a four-step approach for every portfolio client. It begins with a filtration process for discovering stocks worthy of investments, followed by a much more detailed analysis and price movements for further shortlisting. Step 3 is about taking decisions for investments and Step 4 is about constant monitoring as markets are extremely dynamic. The Earn More approach is a proprietary tool used by MFSL for PMS operations. It broadly covers 4 components. A. Discovering blockbusters. Tracking entities having potential for extraordinary growth and continuously monitoring them. B. Pruning risky gambits. Avoiding very highly leveraged entities, poorly rated management, extremely competitive and very thin margin businesses. C. Timing the market. Deciding entry and exit levels after thorough evaluation of market activities and sentiments, news and happenings, and not losing patience in the process. D. Diversification to contain risks. The stock filtering process uses an exhaustive list of parameters which includes 1. Qualitative aspects like management experience and expertise, good governance and transparency, product patents, technology know-how. 2. Sector overview and studying current aspects and trends, entry barriers and competition, government controls. 3. Quantitative tools like past performance track records and consistency, using about 100 measures, leverage, operating margins, returns on assets, etc. 4. Growth potential by understanding emerging technology. The portfolio balancing exercise is all about pragmatic diversifications and restriction of overexposures. The numbers speak for itself. Recommendations by MFSL overperform the bullish period by over 250%. MFSL has over 15 years of experience in providing portfolio management services. The company periodically invests in technology to ensure that its customers get access to seamless, secured and quick service. The management's rich experience is well complemented by its qualified, experienced and trained manpower. MFSL is promoted by a century-old Chennai-based Munoth Group. The company also offers merchant banking, stockbroking and dematerialization services and mutual fund and IPO distribution. It caters to institutional, corporate, HNIs and retail clienteles. MFSL, appointed by IL&FS, is also the investment manager of Valmark Infra and Realty Trust.